Welcome back, Focus learners. Okay, today's explainer is, well, it's a fascinating one, mostly because we're looking at a massive paradox. We're going to dive into the playbook of a guy who totally mastered the hardcore math of the stock market to build absolute massive wealth, only to realize that true freedom, yeah, it actually requires completely detaching from all of that money. It's an incredible journey, taking us from the absolute heights of finance straight into the depths of spirituality, and we're going to unpack the whole shebang together today. Okay, let's dive right into this. Here's our roadmap for today. First, we'll look at the 8,000 crore farmer. Second, we're breaking down the 2020 growth formula. Third, we've got small cap market cycles. Fourth, hidden sector opportunities. And finally, we'll wrap up with the illusion of wealth. Let's kick things off right at the beginning with Section 1, the 8,000 crore farmer and the journey from a rural village to becoming a top PMS manager. So get this, today, Samit Vartak manages an absolutely staggering 8,000 crores in assets under management, right? It's a huge number. His SageOne fund is just an absolute powerhouse in the industry, and historically it's delivered an incredible 20 to 25% returns for its investors. So by literally any definition, he's an absolute heavyweight in the Indian financial market. But, and this brilliantly illustrates why his story is so unique, he didn't start anywhere near Dalal Street or Wall Street. Actually, he was born into a farming community in Maharashtra. Get this, he was the first person in his entire family to even cross the 11th grade. He hadn't even visited a city, let alone heard of a stock, before he was an adult. Just contrast that with his reality today as a top-tier fund manager in Mumbai, managing 8,000 crores. It is a monumental leap. So the big question is, how exactly did he generate the kinds of returns needed to build this empire? Which brings us to Section 2, the 2020 growth formula, or the hard math of compounding. You see, his ultimate goal as a fund manager is pretty straightforward: double the money every 3 to 4 years. But to actually pull that off safely, he looks for 4 strict, absolutely non-negotiable criteria. First up, the company must have an expected earnings growth of over 20%. Second, it has to generate a return on equity, or ROE, of over 20%. This basically means they are highly efficient at taking shareholder money and turning it into actual profit. Third, they need robust CapEx spend. They have to be actively reinvesting their money to build real physical assets. And fourth, he sticks to a strict 3 to 4 year investment horizon. He absolutely requires self-sufficient companies that can predictably generate that high ROE without, relying on crippling debt to do it. So the crucial point here is his utter lack of sentimentality. He has a very simple, ruthless rule. If the growth falls below 20%, we are out. It honestly doesn't matter if it's a beloved market darling, a super popular stock, or even a company he's personally loved for years. If it drops below that 20% growth threshold, or valuations just get uncomfortably high, the stock gets cut immediately. No questions asked. It is discipline over emotion every single time. Moving right along to Section 3, decoding small cap market cycles and timing the boom and bust. Now, what's really interesting about this historical timeline is the sheer predictability of it all. Look closely here. 2008, 2011, 2015, 2018, 2021. Notice a pattern? Every roughly 3.5 years, the small cap market hits a peak and then it crashes. Vartak points out that this cycle usually consists of 9 to 18 months of a market correction, followed by roughly 2 solid years of a massive upcycle. History shows us this really clear rhythmic pattern of boom and bust that he actively capitalizes on. Because in the small cap space, having that macro timing down is just as vital as picking the right individual stock. But, he doesn't just stare at a calendar to time the market. He relies on fundamental lead indicators. And a core indicator for him is the CAPEX to assets ratio of listed companies. So right after COVID, this ratio sat at roughly 25%. But today, in the current market, it has jumped up to 31%. For Vartak, this specific jump is basically the ultimate signal that companies are out there building capacity. It means a fundamental market recovery and a strong earnings growth cycle are firmly underway right now. And for us, looking from the outside, it's a massive signal that the window for growth investing is wide open. All right, Section 4, hidden sector opportunities and where exactly the growth is hiding today. Let's take a look at his high conviction sectors. First up, defense. But crucially, he avoids the big, overvalued major players. Instead, he looks strictly for high-growth, reasonably valued microcaps. For example, a company making rocket shells that has massive top-line potential.
Next, he looks at managed spaces like SmartWorks. He absolutely loves this model because they cater to massive corporate clients looking for office space, completely dodging the risks of temporary co-working models, all while trading at single-digit cash flow multiples. Finally, gold finance, with players like Mututh. They're seen dropping loan-to-value ratios right alongside volume growth. That means they can lend safely without the scary risks associated with microfinance. So, as you can see, it's an incredibly focused, bottom-up approach to finding true value.
Let's move to section 5 and see how this all builds into the illusion of wealth. This is a dramatic shift in perspective. Now, this brings up a really powerful central paradox for this explainer. Does making money actually make you free? Think about it. Vartak built an absolute empire using math, logic, and just extreme discipline. And yet, he firmly believes that accumulating more money simply creates more fear of losing it. Instead of, buying your freedom, endlessly chasing your net worth actually decreases your day-to-day happiness. To really explain this mindset, he brings up the famous metaphor of the Chinese farmer. It goes like this. A farmer's horse runs away. Bad luck, right? But then it returns with 5 more horses. Good luck. But wait, the farmer's son breaks his leg while riding one of the new horses. Bad luck again. But then the army skips the injured son for a war draft. Good luck. The core lesson here perfectly encapsulates Vartak's philosophy. An event is neither intrinsically good nor bad. He truly believes in surrendering judgment and just trusting the flow of the universe. And this profound sense of detachment, he applies it to everything in his life, whether he's navigating a brutal market crash or dealing with an 8,000 crore financial success. He contrasts 2 completely different ways of viewing our lives here. First, there's the society lens. This trains us to just run on an endless autopilot of wealth accumulation. It's all about prestige, external validation, and constantly comparing ourselves to our peers. But then there's the universe lens, which tells us that true freedom is purely an internal state. It's entirely disconnected from your external net worth. It is quite literally an internal freedom from fear. So think about your own life for a second. How often are you running on the autopilot of the society lens? Which leads us to this absolutely staggering quote from one of India's top fund managers. He said, "I would be okay even if this entire 8,000 crores goes away. I'm fine with that." Just take a second to process the awe-inspiring level of detachment that takes. I mean, in a highly volatile, completely stress-inducing industry where a person's self-worth is so constantly tied to their net worth, this absolute detachment is his ultimate secret to lasting peace of mind. So, as we wrap up this explainer, I really want to leave you with a deeply provocative question. Are you building wealth to buy your freedom, or are you just building a more expensive cage? Take a moment today to really reflect on the true purpose of your own financial journey. Thank you so much for joining me, Focus Learners. Keep asking those big questions, and I'll catch you in the next one.